Our panel has shifted around a bit. I just want to see if, okay, so one individual, no, don't worry about it. Michael Rossi is not here. We're going to have Jared sit in for the Forbes Global Property. So in terms of the agenda, here's what I want to do. I want everybody to just quickly do a snapshot of their background and what they're doing. And then we're gonna cover three things if we can. I'd rather have people ask questions and jump in than stick to an agenda. But we want to talk about kind of any trends that everyone's seeing across the landscape, any challenges they have, and then any opportunities. So, and this we just met today, and I'm so grateful to have her on our panel. She's good friends with Jennifer, so it's perfect. So it worked out. But go ahead.
Yes, we're like a big party up here. So Lindsay Sechelle Rubenstein, given the shortened time, nice to meet you, and we're done. But thank you for your time. Cocktails, we'll talk there. No, so I'm a managing director at a multi-billion-dollar family office based. I'm sorry, my voice is shot, so I'm going to talk even shorter. Based here in New York City. Our family office is a private family office. It's the Fruchthandler family. No spelling test. It's a long name. We helped build the World Financial Center, not the World Trade Center. So we're like the OG in family offices. A lot of what we do today is a combination of multifamily, mixed use. We still have some commercial properties as well. And I work on the legacy side. So we have real estate and we have non-real estate alternative investments. And happy to discuss further. I know we're short on time, so I'll leave you hanging there and come back to our trends, challenges, and opportunities. Happy to be here. Thank you, Brinkley and DEI.
What Lindsay didn't mention is she's also auditioning for a Kim Carnes video.
True.
We have younger people in here that don't get that. Anyway.
Confirm nor deny.
Just quickly on my background, David Friedman. I'm a serial entrepreneur, but in a very specific niche area, which is wealth data. So my company WealthX was the first kind of ultra high net worth database to be created. It's used across the world by the private banks, luxury brands, nonprofits, et cetera. It's the area I'm passionate about, enjoy working in. So, Jennifer.
Hi, everyone. I'm Jennifer McCool. I'm EVP of Investment Management for Kushner, a large family office based here in New York, focusing on commercial real estate. I've been in the commercial real estate business here in New York for over 20 years, started practicing law at a big law, and then spent most of my career with related companies. And have been with Kushner for about 2 years or so. Really happy to be here. Thank you for making it to the almost last panel. And hopefully real estate compared to everything else is going to seem a little bit boring, but we'll try to jazz it up a little bit. Thank you.
Hey, sports people have to invest their money somewhere.
And I'm Jared Anton. I'm the managing director of Elogren Forbes Global Properties. I've been in Elogren for 15 years, so I'm a perfect stand-in for Michael. We've worked together for a long time. We are the exclusive member of Forbes Global Properties for New York. Forbes Global Properties is the real estate vertical of Forbes. What we do is very specific. We help individuals, institutions, and family offices deploy capital smartly, whether it's locally here in New York City within residential, multifamily, income producing, or commercial real estate, or globally through the Forbes Global Properties ecosystem. I am very bullish for the first time in a decade about New York City real estate and our appreciation potential. You may have heard or read somewhere that nationally real estate has gone up. It's gone up about 50% since the start of the pandemic nationally, whereas New York City or Manhattan specifically has only gone up 3%. So I'm here to tell you that New York City is undervalued and is due for a counter-cyclical trade, which is what we're known for, is going against the grain. So Miami has had it today. It's gone up about 80% since the start of COVID, about 108% since New York City has hit its previous peak. And I can tell you that the Florida trade has probably exhausted, and it's time for New York City to be New York. So let's make it rain. Not literally, though.
Well, we do have a drought now, so we actually do like literal.
So, and then I also didn't mention, I'm at Forbes Bannister, which hopefully this week is going to be rebranded Forbes Global Talent, which is the sister portfolio company of Forbes Global Property that's in the executive recruiting space. So it's a new venture by Forbes that blends media and executive recruiting, right? So, so here's the question for the panel. what trends are you seeing across the landscape that's turning over the apple cart in terms of shaping, disrupting things that help us see around the corner? Like what's around the corner that we're not looking at that in the room that you could help everybody?
I went first last time, so I'll let somebody else go first, but I just want to take a poll since we do have, normally when we do these panels, it's a bunch of real estate or investment folks, and I love the diversity in this room and all of the talent. So I guess how many in here think that real estate has like hit a bottom and this is like a great time to invest? Let's go commercial. Show of hands, just so that, because some people are like afraid to raise their hand. Group thing. Okay. Okay. How many people think there's still another leg down to go potentially? Okay. Okay. And then other question, this was, I guess, more in vogue about a year ago, but still relevant. This notion of a cliff that a lot of the loans and debt are going to reset at phenomenally or ridiculously higher levels. How many of you have heard about that or understand and believe that to be the case? Okay, thank you. I'm going to take that information and let my colleagues, and then I'll come back in because I want to be mindful of time.
Sure. Well, I think at any given moment, there's phenomenal, crappy, and anywhere in between in terms of the investment. So real estate is hyper local and hyper specific. So I can point to a great investment and a not so good investment. I will say one thing I'm looking at, because I'm more in the residential space, is understanding where to invest capital, right? Again, I believe in New York City, but for many, it has an incredibly high barrier to entry because it's incredibly expensive. So I went on down a deep rabbit hole, basically trying to identify which other markets in the country I believe are poised for outsized appreciation in the next 2 to 5 years. My analysis is based upon isolating markets in which there is a large percentage of job growth, but a very low percentage of new homes, right? Very basically, real estate, like anything else, is supply and demand driven. More people, less supply, or the same supply, prices are going to rise. Went down a deep statistical rabbit hole. Anyway, 2 cities come up top of the list: St. Louis, Missouri, Rochester, New York. So super interesting. Many people will invest from their heart. For most people, myself included, those cities would not be anywhere near the top 100. But again, this is what we do at L. Forbes, is we focus on making data-driven investments, removing the emotion from it, and pointing our clients and ourselves to areas that the data tells us make sense. So St. Louis, I believe, has an incredible footprint foundation, very, very low entry point, some sports teams, and a much better footprint to be able to grow from. So this is what we're working on, is really being able to take data and use our insights and be able to help people make a lot of money. Because at any point in time, there's really good real estate deals to be made. And there's usually someone on the other side that has a reason to sell, which if you understand that reason, you can exploit the right deal for yourself.
Jennifer, let me ask you a specific question. So it just seems like at every family office I go to, that multifamily housing is like the soup du jour, right? So can you talk about why as an asset class, is that such a focus for family offices? And then also, why is that an interesting asset class for athletes?
Sure. So just starting with, again, Kushner, 40-year plus company, the DNA of the company is multifamily. So that's been a focus of mine over the last couple of years in terms of sourcing new strategic relationships, diving into the investment opportunities. And I think, high level, I'll start with just kind of trends and then, pivot a little bit more towards, and it's interesting because the lens of the family office, I think is very similar DNA wise to a lot of the folks in the room here about who do you want to invest with, who do you want to spend time with, the trust, the integrity of the group, and, really building that up. And I think, working with many, many families over the years, it's super important as you create those relationships to figure out who you fit with and start to make those connections. I just say that kind of high level going into any investment, whether it's multi or any of the others that we might talk about today. But as far as multi goes, people like it because demand remains high, right? Through recessions, through economic downturns, people need to live somewhere. So that continues now. Q3, the demand was up absorption rates are up, meaning the number of units that are put into the market and being rented by renters was quite high in this last quarter, roughly 240,000 units, which was a roughly, I always forget the stats, so I have it in front of me here, an 80% year over year increase from 2023, which is pretty impressive. We're excited about that. There's also a propensity to rent as a trend ongoing with millennials, Gen Z. They like well, first of all, affordability on the housing side, as you know, is close to impossible for many people. So the rental market becomes much, really the only option at this point with interest rates where they've been. Folks just can't afford the quote American dream. So the rental market's been strong ongoing because of that. Also, the flexibility that the rental market provides, especially the younger folks who work from different cities and over the pandemic, being able to pick up and kind of go where they want to live, and that rental flexibility is also very attractive and seems to be also making things continuing the demand. The sales. I'm sorry, I didn't even have surgery.
It's I mean, not really. It was surgery.
The investment sales market has been up also in the last quarter. So with the Fed reducing, albeit slightly, the interest rate environment, and hopefully this week again, a small decline that really, even if it's psychological, it's happening, and we are seeing things that are trading, sponsors and other owners are getting very excited about putting things on the market and trying to get some liquidity. So things are starting to loosen up a bit, although the spread ask is still considerable, and so it's not a floodgate, but we are seeing some movement there. Supply is also increasing. It was down a bit, new starts in 23, but 24, 24 new starts were down, but the increase is expected to be a little bit over 5% of new supply for next year. And then there's especially with our family as well, there is a trend towards kind of higher barrier to entry, suburban markets, close to transportation, high population growth, job growth, good schools, all the normal fundamentals. But there's really been a flight to that. And in some states, for example, like New Jersey, they've really benefited from the lack of, frankly, the ability to build and the high cost of New York City. I joke around and say the best thing that ever happened, for example, to the Jersey City market is New York City, because you can't build, you can't buy. And so, folks who would never dream, including my former employer, would never dream of getting in, putting their toe in the water in New Jersey, are now very much in that market, building and buying. And so that we see that continuing ongoing as well. And then just pivoting to the second part of your question, when we talk about with other families who might invest with the Kushner family, we talk a lot about the benefits of multifamily investing, including that, certainly the consistency, the cash flow, God willing, the tax benefits, the resiliency during down markets. It's just the long-term wealth building, which I've heard quite a few times here in the room. As I said, so there's a lot of familiar DNA between what athletes might be looking for on a long-term basis, and some of the elements that are involved in multifamily investing.
I'll jump in on that, and that's why I like to go last, because that was so well covered and said. So other than dropping the mic, no, I think we have the benefit of such great minds in the room. So I'm going to kind of take what was just unpackaged by Jennifer and Jared from a variant perspective and talk about it from the perspective of legacy. We have a lot of, we're fourth generation, 650 family members. So we've got a whole lot of legacy. We're like a mini university endowment. But hearing from the minds in the room, as I've been able to hear throughout the day, legacies can be at any point. And for some professional athletes that are now embarking on entrepreneurial ventures and the entities that help serve them, it's really, what do you do after you've amassed wealth from, whether it's real estate, professional athletes, having a unicorn go big? What do you do from there to invest and continue the legacy? And very often, and we see it in our own family, but where you are the kid, you're having kids. What are you doing to take the profits you have today and have them compound for tomorrow in a way that does not correlate to how you made the money in the first place? So if you're a basketball player, not basketball, right? This isn't rocket science. If you made your money in real estate, not theoretically, not real estate. You made your money in public, private. So a lot of that and trends are how we think about that. Very, very high levels. The intersection loosely of demographics, where there are cool things happening. You used a lot of great statistics to say that. And the ability to add value and buy well. Buy well, great area, make money, generate returns. I know I'm about to see we're 2 minutes in. So I basically, we're going to be able to give an opportunity and say goodbye.
No. Do we have any questions?
Yeah.
Yeah. Yes, ma'am.
In terms of operational efficiencies for real estate, are there any new revenue generating ideas that are upcoming for real estate for property managers?
Okay. There are many. The PropTech industry is broad. I will tell you from Kushner's perspective, again, one of the other things you want to think about if you're thinking of investing, whether it's in multifamily or office, or although we should talk about office, anybody looking at office should be very careful about that, but is management and who manages the asset. And I think self-management is key. We manage everything we own. And that's really, especially when rent growth is down, which I think I may have mentioned from my trend list, which it has been roughly 40% across the markets on an average, although the Northeast, Mid-Atlantic, and the West Coast are a little contrarian and they've been up. But management and finding ways to make money through efficient management and smart management is absolutely critical. And that's whether you're buying one single family home for investment, or you're buying a multifamily asset or others, as I mentioned. And that can be done. I'll just give you one example, which I find very cool. And I'm sure, I'm old, so it's probably been out for 5 years and I just found out about it, but there's something called, I forget her name. It's a AI generated phone call, and basically has, I don't know, 50-fold been able to multiply the amount of intake for renters who are interested in the assets, and give a return phone call back and set up a tour. And again, this is all AI generated to help with never ever missing a lead. So and again, that's bottom line revenue, you're on top of it, like 300 a day or something crazy, some insane number that a human would never be able to, to really keep up with. So there's innovation like that. That's a very small example.
All right. I think, do we have time for a couple more? Yeah.
One more.
No,
wow.
Julia went like this. She went. Okay, we got it. All right. I think
2 short ones.
okay, we're gonna call it, but I am gonna put a capstone on it real quick. I'm gonna make my own prediction. I think one of the areas where we're gonna see the most interesting growth is around open source intelligence on prospects, which includes the ability to analyze someone before they show up for a meeting and know about their net worth, liquidity, and also the anti-money laundering and KYC. So for an international buyer, those things are so antiquated right now, but right now there's a lot of the different pieces. I'm on the advisory board of 3 different companies that are doing this separately, but I'm going to see the convergence of these things happening very quickly. So, all right.
Yeah, just quickly to jump to that. Yes, I'm collaborating with some folks on, it's almost like an AI profiling platform that will revolutionize a first rule of Fight Club. Don't tell anybody about Fight Club. Warren Buffett, don't lose money. Our family office's rule 1 is never lose a meaningful relationship. Rule 2, rule number 1. If there's a way to embrace technology to help profile, but still rely on the old-fashioned art of the handshake and seeing how people relate over time, that's a beautiful.
It's a both and. Yeah, absolutely. So,
totally.
great.
Talk to us outside.
Thank you.